According to Microsoft's CoPilot AI service, the most common reason microbusinesses cite for using a certified public accountant, CPA, in the U.S. is to handle tax preparation and compliance. CPAs help ensure that businesses comply with tax laws, identify deductions and credits, and minimize tax liability while avoiding penalties, audits, or legal complications. By our estimates, more than 91% of the revenue generated by our smallest Canadian CPA firms is for tax and compilation services. In our view, at least, compilation services are really just the necessary first step in providing tax compliance services. In part one of this series, we looked closely at who the users of small business accounting systems were in order to understand the essential first step in designing those systems. So before we start, let's revisit exactly what a needs analysis entails.
The essential first step in any systems design process is typically defining the problem or understanding the requirements. This involves gathering information about the system's purpose, functionality, constraints, stakeholders, and desired outcomes. Without a clear understanding of what needs to be achieved, it's difficult to proceed with designing an effective solution. This step sets the foundation for the entire design process, guiding subsequent decisions and actions.
In part one, we determined that our users were the small businesses themselves and their public accountants. In part two, we'll look at the what and the why of accounting systems design for our smallest businesses.
The proliferation of accounting standards developed by our regulatory bodies in Canada have significantly increased the time involved in training new accounting practitioners. We now have 3 different sets of financial reporting standards for businesses in Canada. These include 1. International Financial Reporting Standards, 2. Accounting Standards for Private Enterprises, and 3. U.S. Generally Accepted Accounting Principles. This doesn't include the reporting requirements for non-profit organizations, nor does it include the proliferation of assurance standards. We used to have audit and review engagements, along with compilations which were not considered an assurance engagement. Recently, the regulatory bodies for our profession added new standards for compilation engagements. Compilations thereby became a non-assurance assurance standard. This effectively increased the scope of these regulatory bodies to regulate commercial activities in this country. Regulators argue that this proliferation of standards is necessary when banks rely on financial statements prepared by their members in order to facilitate commercial lending. However, only 31% of small businesses in Canada receive all the funds that they apply for in terms of conventional bank loans. Note that statistical agencies in Canada define a small business as having fewer than 100 employees. Our smallest businesses rarely borrow from commercial lenders. Instead, they rely on credit cards, family money, or the pledging of personal real estate. At the same time, the complexity of income and indirect or sales taxes has increased almost exponentially. So, while all aspects of the business and regulatory environment are increasingly complex, we would argue that accounting standards are needlessly so. It seems that Canada's courts agree. The Supreme Court of Canada stated in Canderel Limited versus the Queen that the determination of profit is a question of law. Accounting standards are not law. In fact, Canada's Income Tax Act states in Section 9 that, subject to this part, a taxpayer's income for a taxation year from a business or property is the taxpayer's profit from that business or property for the year. Our point is that practitioners in small firms and their small business clients need better training in tax, and much less in areas that are largely irrelevant to an economy increasingly dominated by small business. In our view, systems designers in small public accounting firms need to design systems that allow their clients and the firms themselves to compile transaction data in such a way that we can determine profit and tax liabilities in accordance with the law. To that end, a dictionary and the ordinary meaning of words is probably more important than the pronouncements of accounting regulators.